ABSLI Nishchit Laabh plan. Will investing in this policy help add value to your investment portfolio? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to take the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether this plan will be a good fit for investment portfolio or not, let us understand a few basic details and how ABSLI Nishchit Laabh plan works. So this is a non-linked, non-participating individual life insurance savings plan, and some of its key features are: it gives you the flexibility to build your plan with a choice of plan option, premium payment term, and policy term. You also have a choice of 3 plan options: endowment, income with lump sum, and money back option. You get guaranteed long-term income for 20 or 30 years under the income with lump sum option. Loyalty additions are also there to boost your maturity corpus and survival benefits as per your chosen plan option. You get guaranteed lump sum benefit at maturity of this policy. So these are some of the key features of this policy. Now let's take a look at the benefits available under this policy. So there are 3 kinds of benefits. So first of all, there is something called death benefit, which is given to the nominee or the heir in the case of unfortunate death of the policyholder. So as you can see, the death benefit is the 2 benefits mentioned on the screen: sum assured on death, surrender benefit. And out of these 2 options, whichever is highest at the date of death of the policyholder, that will be given as a death benefit to the nominee or the legal heir. So the sum assured is higher than the sum assured, or 105% of the total premium is paid till the date of death of the policy holder. So this is the death benefit. Now let's take a look at the survival benefit. So this is given to the policy holder on the survival of the life insured, provided all due premiums have been paid. So if you have chosen the plan option of endowment option, then there is no such benefit as survival benefit. But instead, if you have chosen income with lump sum option, then on survival of the policy till the end of survival of the policy holder, then till the end of every policy year following the completion of your premium payment term, an income benefit which is expressed as a percentage of your annualized premium will be paid to you, and loyalty addition also shall be paid on your date of maturity. And if you have chosen the money back option, then if you have survived till the end of premium payment term, then every 5th ABSLI policy year after that, money back benefit and loyalty addition will be paid to you as the survival benefit. Next is the maturity benefit, which is given to the policy holder when the policy has matured. That means when it has completed its complete policy term. So if you have chosen the endowment and income with lump sum option, then your guaranteed lump sum benefit plus your loyalty additions are payable as the maturity benefit. So this guaranteed lump sum benefit and loyalty additions are expressed as a percentage of your total premiums which has been paid. And if you have chosen the money back option or the endowment option, then there is no such maturity benefit available. So these are the benefits available under this policy. Now let us move on to taking a look at the advantages and disadvantages of investing in the ABSLI Nishchit Laabh plan. So first, let's take a look at the advantages. So you can enhance your risk coverage during your policy term by adding riders for a nominal extra cost, and you can even take a loan against your policy with a maximum loan amount being 80% of your surrender value. These are the advantages. Let's take a look at the disadvantages, as it's equally important to be understood as well, because disadvantages reveal the potential risk you might be undertaking by choosing to invest in this policy. So the disadvantages are: the sum assured covered by this policy is insufficient to cover the basic future financial needs of your family, and also the returns you get from this policy are relatively low. So these are some major drawbacks that is present in this policy. Now, as we have understood some basic details about this policy and how it briefly works, let us move on to the analysis part of the video. So now we are going to conduct an internal rate of return analysis of the ABSLI Nishchit Laabh plan. Why we conduct an internal rate of return IRR analysis is because no matter the benefits and advantages you might get from a plan, what matters at the end of the day? Why do we invest in the first place? We invest because of the returns we get. That's why we are going to conduct an IRR analysis and see what kind of returns we get in our hands at the end of the day. So just for calculation purpose, let's consider a scenario where a 35-year-old male has invested 50,000 rupees annually in this plan. he has chosen the endowment option with a premium payment term of 10 years and a policy term of 20 years with a sum assured of 5.25 lakh. So as this is an endowment plan, he will receive the maturity benefit including loyalty addition at the end of the policy term. So the maturity amount here is 10 lakhs and the internal rate of return IRR is 4.52% as per the ABSLI Nishchit Laabh plan maturity calculator. So this rate of return 4.52% is relatively low for a long-term investment with a 20-year policy term. So 4.52%, even if you compare it to the bank FD, it can even give you returns of 6 to 7% of guaranteed returns. But here it's only giving you 4.52% for a time period of investment which is 20 years. So even if the guaranteed benefits of this plan appears attractive to you, this return is really very lower compared to other debt instruments available in the market. Additionally, the ability to assess the funds is limited under this plan. So these factors impact the overall suitability of the ABSLI Nishchit Laabh plan. So as we can see, this plan is not giving us any kind of a value or sustainable returns in the long run for us to consider making it a part of an investment portfolio. Now we are going to do is we are going to conduct another analysis, which is the comparative analysis. So we are going to compare ABSLI Nishchit Laabh plan with other investment products available in the market or explore other alternative investment strategies to see if it can fetch us better returns or with better benefits comparable to this plan. So what we are going to do is, instead of investing in a investment cum insurance policy like ABSLI Nishchit Laabh plan, we are going to invest in a life cover and investment separately. So by separating insurance and investment, you can accumulate even a higher corpus. So for life coverage purpose, a pure term life insurance policy has been chosen with a sum assured of 5.5 lakhs, which cost a premium of 3,900 annually. But whereas in ABSLI Nishchit Laabh plan, we were paying an annual premium of 50,000, but here we are only paying 3,900 rupees annually. So the remaining amount 46,100 can be used to accumulate a corpus by investing in other investment vehicles. So this pure term insurance policy also has a policy term of 20 years with a premium payment term of 10 years, similar to ABSLI Nishchit Laabh plan, for a more fair comparison. So what we are going to do now is we will consider two investment instruments, one for equity and one for debt, just to show you how different asset classes perform. So you can choose investments based on your risk appetite. So for a debt instrument, we have chosen a PPF, which is a public provident fund, which is a government backed fund which gives you guaranteed returns, and also it has tax benefits. So what we are going to do is we are going to combine both term insurance plus PPF and invest in this combination. And if you look at the maturity benefit, like the final maturity value of the PPF account, so first we need to understand one thing: the PPF account requires a minimum contribution of 500 rupees per year for 15 years, but the policy term is only 10 years, right? So we have made some adjustments. For the remaining 5 years, we have made minimum contributions of 500 just to keep the PPF account running. So the final maturity value in the PPF account is 13.59 lakh with an IRR of 6.56% when combined with a pure term policy. So as you can see, compared to ABSLI Nishchit Laabh plan, it's giving a higher maturity value with a higher IRR, which is a decent amount of return compared to the inflation in the market. So this is something you can consider if you do not want to risk as a conservative investor and you want to invest in a debt instrument. But if you're someone who's an aggressive investor and you're willing to take a risk, then you can definitely consider investing in ELSS, which is an equity instrument. So ELSS, why we have chosen ELSS mutual funds is because it has a track record of consistently proving that if you choose to invest in it for a long-term period of more than 7 to 10 years, then it has performed up to 12% per annum. So according to that track record, and also because in equity in generally, if you invest in it for more than 7 to 10 years and take that kind of risk, then the market cycle would have also gotten completed along that time, and you will get potentially better returns and stable returns. So we have chosen an equity based instrument like ELSS mutual fund based on its track record. So as you can see, if you invest in a combination of term insurance plus ELSS, the pre-tax final maturity value of the ELSS fund is 28.14 lakh. But here you have to account for the capital gains tax. The post-tax maturity value is 25.88 lakh. You can refer the ELSS tax calculation in the tabular column here, and which is shown on your screen. So the post-tax maturity value is 25.88 lakhs with a IRR of 10.88%, which is calculated on the post-tax return combined with the pure term policy. So as you can see, the huge difference between your ABSLI Nishchit Laabh plan maturity value and the maturity value shown in the ELSS mutual fund with an IRR of 10.88%, which is definitely an inflation beating return, which will help you in accumulating wealth in the long run. So this accumulated corpus from these investments can help you achieve your financial goals. So these investments, as we have seen in the example right now, offer better returns, making them a superior option to the ABSLI Nishchit Laabh plan. So now, as we have compared and analyzed ABSLI Nishchit Laabh plan, what is the final verdict? Is ABSLI Nishchit Laabh plan worth investing? As we can see, this plan from the return analysis shows that the yield in this plan is comparatively low with other debt instruments, and also the life cover provided here is insufficient to meet your family's basic needs in case of unforeseen events. Both the cash payout and the death benefit is also inadequate for a family to achieve its financial goals. Given the current inflation rate of 6 to 7%, the ABSLI Nishchit Laabh plan falls short of providing the necessary support, and it also has a high agent commission. So what you can do instead is, as we already seen in the comparative analysis, you can explore alternative investment strategies. Instead of investing in an investment cum insurance policy and getting your money locked for a long period of time, what you can do instead is you can definitely separate your life cover and investment vehicle and invest in it separately. For life cover purpose, as you have seen, you can choose a pure term life insurance policy which offers adequate life cover even with an affordable premium for a more higher coverage. So it can act as a safety net for your family, and these policies are available at an affordable premium, so you can allocate more of your savings to solid investment. By solid investments, you can build a diversified portfolio of debt and equity instruments according to your risk appetite. By investing separately and choosing better investment options, you can definitely gain better inflation beating returns. So what you need to do is you need to align your risk tolerance, time horizon of your financial goals with appropriate investment options, so you can build a diversified investment portfolio across various asset classes to achieve your financial goals. But if you're having struggles to choose which option will be suitable for you or how to plan your financial plan and your investment journey, because you do not have the sufficient time or neither the sufficient knowledge to do this, then you can definitely consult with a professional financial planner for professional guidance on mapping out your financial plan and crafting investment strategies in order to help you achieve your financial goals in a more better and faster way. So involving a professional like a finance professional will definitely help make your investment journey hassle free and more easier for you to focus on your other work. So you can definitely consult and invest through a finance professional for a more better financial future.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.